Assalamu alaikum everyone. I would like to welcome all of you to our class, and I would like to also apologize for the delay in uploading new videos. Of recent week, I've been a bit busy and I've been sick recently, so that's why I couldn't upload any videos. I think our last class was based on liquidity. We talked about liquidity introduction and what is liquidity, and what have you. So this is going to be our continuation on liquidity. We are going to talk about these three topics, even though these two are just a demarcation of what doll means. So without wasting any time, doll, when we talk about doll, it's just an abbreviation of what? Draw on liquidity. So what is drawn liquidity? A drawn liquidity for us is usually what? A target. When we target in the market, maybe after making your analysis in the market, there's definitely a place you are targeting, probably where you're going to place your what? Your take profit. That is usually your doll. So, like for me, I use risk to reward ratio. I just use 1:2. It doesn't matter what happens, but based on market structure, I usually have a doll. If I'm on my higher time frame, let's say for this I'm on 4 hours, and let's see. So if you notice, when this market started rallying downwards, from our last class we can understand that we have a what? Liquidity sweep here. So we can tag this as what? Liquidity sweep. We have a break of structure here. So we have a break of structure here. Market continuing going lower. So our draw liquidity are usually what? Swing points. Swing points. That is our what? Draw liquidity. And I use this horizontally to identify my draw liquidity. So if there was a pullback here, probably I will have gone short here or something. Even if maybe as market was still in a higher time frame, I might still wait after this break of structure, maybe a mitigation of any of this point of interest, which it failed to do. So since I noticed that this market is what is selling, this should be my first target. So as I'm selling, I'm going to look for this first target. So when this market reaches this level, what am I going to do? I'm going to wait to see if it's going to continue lower to reach towards this level, and then subsequently reach this level. So these three swing points we identified here, opposing out, since these swing points were swings created when market was rallying up, opposing our downward movement, that is what? My drawn liquidity. Because drawn liquidity, as I said, is money, and market is designed to target SL. It's my own belief, sure. You don't have to believe it. Market is meant to target SL. So as I'm selling, I'm going to believe that there are buyers here, and market is going to what? Subsequently take them out. Likewise, there are buyers here, and we usually place our what? SL below a swing point. I think further, when I talk about liquidity based exit strategy, I'm going to explain further why we place our SL below liquidity level. So I'm going to anticipate market what? Take out this low here, and also take out this low. You can identify this, and as it continues lower, this, and then lastly this for this market rate. So that is what drawn liquidity is for sell. So I gave an example of sell. It has its name. That's where this what? Sell side comes in. So like the structure I drew out here, we had market rallying up just like what I identified here. We have our liquidity sweep here, our break of structure here, market coming to what? Mitigate a point of interest for sell opportunity, or if it hadn't, maybe we had another sell opportunity here. Maybe if we're waiting for better confirmation after this break, another sell opportunity. But lastly, this is our liquidity. whatever sell we are going to make a sell anticipating market is going to continue lower to take out this low. After taking out this low, what are we going to do? We are going to wait, because there might be another low here which market might create a good displacement based on the topic we did on candlestick. Maybe a large wick candle selling continue lower with a very large body showing displacement continue lower to take out a new low. So this example here is what we call a sell side liquidity. So liquidity levels that identify based on lows being taken out are called what? Sell side liquidity. So likewise, the opposite of it here is called what? Buy side liquidity. So we have a liquidity sweep here, a break of structure over there, market coming back to mitigate what? This point of interest for a buy opportunity, and then we are going to what? Target these highs. So that is it. And since I gave an example of what sell side, let me give an example of what buy side, because from our last class, I think I said market moves to target what? Either highs or low. So if market is buying, it's going to what? Target highs. So let's make an example with this. As I said, we have what? Just like the market structure I just analyzed now, we have our liquidity sweep here, or if you want to identify this liquidity sweep here, this is not a break of structure, because what we're looking at market in what? A bearish position. So our bias is what? Bullish, and sorry, in a bullish position. So our bias is bullish. So we're going to have what? Breaks instead of liquidity. So these two, we can identify them as what? Liquidity, since we're not looking for sells, we're looking for buys. So we have this explosive movement upwards, market coming back to mitigate this other block here, or filling into this fair value gap. Another buy up with continued higher share like this. Now maybe in 1 hour you might have an opportunity to go long. We still took out this for liquidity. We have a break here, market coming back to mitigate these levels, and we continued higher. So how are we going to identify our draw liquidity? As market began rallying, since we saw this explosive movement, a liquidity here, break of structure coming back to mitigate, where is our first draw liquidity? This is our first draw liquidity. So after this has been satisfied, what are we going to do? We wait and see what is going to happen. Then we wait, continue. As it broke out of this level, we had a target here. This is our second draw liquidity. And then can we identify anyone? We have this, and subsequently this, which market took out all of them before it started selling. So this liquidity here is what we call the what? Buy side liquidity, which is the abbreviation here. So I don't think it's just a target you have. A draw liquidity, to some people it can be a what? An opposing point of interest, because some people usually what they do, like as market is rallying here, they are going to draw this fair value gap out for their draw liquidity. So when market was heading towards this fair value gap here, it was coming down. Maybe they are in anticipation of we having a bullish market when market mitigates this. So whatever they do, they try and look for their sales before market reaches this level, because since there is a bullish point of interest here, they might say, okay, market may react to this level. So that's what we call it. It's just a draw liquidity. We are anticipating market to head towards as a target, and when market reaches your target, you wait and see if it's going to continue as this. Now you can see it continued with a very good what? Bearish candles, giving us another what? Week here, continue lower. So we can make a little analysis here to give an example of why this continued. After taking out this low, what did we see here? And this fair value gaps here, market coming into this fair value gap, mitigating it with weak shows displacement, as we all know, continue giving us a what? Break structure here. So with this we can say what? Market is likely going to what? Maybe take out this low subsequently taking out this one. So if we had two structures here, maybe in 1 hour time frame, we can identify what cells heading towards what this bearish this what do you call it, sell side. So it's the same thing for buys also. So I think this topic too is also quite straightforward. There's no need to dwell on it that much.